day, you guys. Welcome to Jumanji. How's everyone doing today? This makes way more sense if you've been in the forum. Great. Yeah, for those of you not in the forum, we've gone from fires that have burned entire mountain ranges to now torrential flooding to this morning waking up with swarms and swarms of flying ground termites that have burst upon the world. So it's a little crazy here. Nothing at all exciting happens to me, right? Oh my gosh. And the dove got in my courtyard, which has like a pergola type of thing over the top of it. A little baby dove. So I'm running around trying to capture it as I'm in a trade and the cats are going berserk. So that's been my last couple of days. All right, you guys. So let's go ahead and get started and take a look at what is going on in the overall market these days. So it is July 24th. I'm not sure what level of Jumanji I'm on right now. Don't know what's coming next. Oh, I forgot the whole COVID plague, right? We got that one going on too. Oh boy. Okay, so I am going to pull up, right? It's distracting, right? Going to start with the NASDAQ here this morning, you guys. And so in League of Traders this week, we've been looking at this larger time frame here where over the last couple of days, we saw a nice double top. And then we got this pullback into just this mess. It's not like a typical avalanche because it's kind of all back and forth, but at the same time, larger time frames are coming into a lot of resistance, a lot of extensions. So we were looking at a pretty high probability that this would eventually break down and that it would go and gain momentum on the breakdown. And this is just what we're coming off of here from yesterday going into today. So this is a type of avalanche, but it's really a messy one. I'm going to go kind of pull this back here. You can see we're right at some good support here. Previous high right here, right at that low right there. Like it's a perfect retap of that level. I think we can still pull through this a little bit more though. Look at our daily time frame here. Daily time frame. What we've been looking at is, really kind of similar impulse move zone for some of like the more average impulse moves. There's not a ton to compare it with just because the market has gone so berserk over the last year or so, but pretty typical measured move zone here kind of went to about 123.6, and then this is a double tap. So you've got this nice V, pulled back more than a third before it went to retest that previous high. That makes that previous high stronger, harder for it to break. We just saw the same thing happening on a 400 tick too. Let me show you that. Actually, I can show it to you on the 200 here. See this double tap here? Even this one here, because you've got it pulling back about a third of that breakout move there. So the double tap offers a pretty strong resistance. A little bit of a slow into that resistance also helps too. Of course, you can see we've got a fib level there also. So backing up a little bit more to our weekly time frame, we don't have a really core pattern that's trying to develop here at the moment. We're basically still in this trend here. And so we talked about before, there's two possibilities. It can try to go for the whole full measured move before it went into kind of this slower chop. So it can try to go and push for that whole measured move on a bigger time frame, or it just holds this channel here and breaks. And when that happens, we would usually get it popping back up again. So it would usually try to go for a double tap on a bigger time frame, so on the weekly chart in this case, because that would be more of like pointed ballet toe type of situation. Right now we're kind of halfway between these two. So I could really see it doing either or at this point. Of course, the intraday charts were still looking more bearish. I would like to see it probably pull back down into this middle of this range here is what we're looking at. It's kind of gone past the do or die point for trying to push for that bigger measured move. So we can see that here a little bit better on this daily chart. So here's the first move up. And notice it had two waves. Then we went into this congestion here and then tried to break again. But then look at how long it's paused. So what did I talk about last week, you guys? I think it was in forward focus. Right. How long does this correction form is important. So in order for that to really continue and to put in that bigger kind of measured move there, where it just treats this whole thing as the correction, it really shouldn't pause for longer than it does right here. And as you can see, it's already pulling out past that. So that is going to make it much more difficult for it to go and do the other possibility that we discussed last week. So way more caution on the upside right now. I'm going to pull up the other indices. We're going to look at the S&P 500 here next. So here's our ES. And as you can see, we are right in that resistance zone from the previous breakdown. So this is a really strong resistance zone. We had the two corrections in here. And again, we also talked about, similar possibility. Could it go and do a measured move type of thing up, but again, not really happening on the smaller time frame. So here's our daily. So see how that's coming into this? It's slowing momentum. So again, it would have had to have done kind of a faster move. And we talked about this before too, where it's easier for it to be more predictable when this is a time correction and this is the price correction. Then it's easier for it to go and do a measured move here and then here. But that halfway point is the first main hurdle. And what we're seeing in the market is that it's simply not having any luck pushing through that hurdle. And in fact, we had a 2T setup here on the smaller time frames. I know Donna was in this, and this is what we were looking at too in League of Traders, where this had moved up. It was going into a range, but it had already shifted momentum when it was coming out of that range, making it easier for that to try to pull back into this zone here. So there's still more room even for this to pull back as we go into next week. I would expect it to come into this level pretty easily, and then we'll just have to see how it reacts to that level to see how much further it can go. But right now, pretty good odds that we're going to still see a lot more weakness throughout next week. Would the weakness be slower? Most likely. going to switch this over here to the Russell quick. Good support here on the NASDAQ on just a smaller time frame. Let's see where my NASDAQ chart go in the background. Right there. See that? So we're getting a little bit of a bounce here. Russell, it's also a retest of the previous low. So here's our Russell. This is our daily. We've got kind of basically bouncing between the 50 and the 76.4% retracement levels. This is something where a lot of times I will see this go into a 2T and then turn around. So that's kind of interesting because it doesn't really go along with what's happening in the rest of the market. So in a lot of cases, what we'll see is when we get this kind of extreme move and then the channel breaks like this, we can get it going into this level and then flipping and turning back. But with the way the other markets are performing, I think it's going to be harder for it to try to do that. So this might just go into another correction like this in here. Wouldn't usually expect this to fall too quickly, but it's going to depend upon how the intraday momentum shifts. Let's go look at what that's doing actually. 1,000 tick isn't really much. We've just got the 2T up there from yesterday. So your 2T a lot of times is just basically when your inverse head and shoulders comes in and hits a measured move here to here. And there's the 2T setup. So we're still coming off of that on this time frame. And that's what we're really seeing here on the 60-minute too. It's basically the same type of breakout that we saw on the ES where it had the extreme momentum over here. So did the two-wave correction, but then it just couldn't get that momentum going. So this is still looking weaker here on the 60-minute time frame. Looks like we'll get it pulling back down more into next week too. More back and forth on the way down. I think that's a possibility. The 60-minute of the Russell really doesn't look like too steep though, coming off of this high. So we might get it trying to do something where, you know, the shifting momentum kind of gets to a point where then it can go and gain momentum. So it might do something like that, where it kind of starts out choppier and then it ends up putting in another wave down. But right now this is pretty open. So you've got support in here, but because of the 2T here, as it comes back into the support, it's hitting it really quickly. We didn't see a whole lot of stalls along the way. I think it's going to be easier for it to pull back through that. So this zone over here is what I would be looking for, a stronger support. Kind of like what we see happening on the NASDAQ right now, where it's kind of rounded off and then it's gaining momentum. Let's see where that goes. See this, how it starts like this here and then it's pulling back. So this would be a steep 2T kind of type of thing going on. So it's that same idea, but then it's going and gaining more momentum. So these highs will stall it, but then it still has the potential to go and gain. Let's go take a look at some of our other markets here. So here's our pound. You can see kind of the opposite happening here on the monthly, where it went extreme and then slower. So if this started off more choppy up here, then it would have a better chance of going and gaining momentum. Just like we saw on the intraday charts of the NASDAQ that I first talked about when we came on. So that would allow it to go and gain momentum. But then the opposite also happens. If it's extreme to start with, continuations have a harder time. So compare this to that. You guys see? So watching momentum is really important to help you understand how a break can happen. If it's slower than average and then goes into a base, like if the downside is slower than average, then it goes into a choppy base, the break of that base can be much faster. If it's extreme and then goes into a base, the breakdown is much more likely to be a lot slower. Hey, Nicole, what do you say we record this as a tip? KK? Yeah. Okay, you guys, we're going to do a Toni tip clip here quick. I'm going to go and shift gears here for a second. So what this is if you guys haven't seen them before, is that I'm doing like short little videos of like little mini lessons for you guys. So every once in a while, if I see something that, I think, hey, we can do a short little video, we can go and do that. And then you guys can go back and study it. Yeah, flash memory tips. Exactly. All right, so here we go. So my tip here for this video has to do with momentum and breakouts. So how fast can you expect a breakout to happen? And usually the momentum as you go into a zone of congestion is your primary clue for how fast a market is going to be able to break out of a zone of congestion. And this can be in any single market. So it can be in your stocks, it can be in Forex, it can be futures. It doesn't really matter. So any market, any single time frame. So for example, this is a monthly chart of our pound here. And as you can see, we have a really extreme momentum move back in 2008. This is what we call an impulse wave. It's very, very rapid, not a lot of overlap as it continues lower, went into a zone of congestion. Now, when it broke out of that zone of congestion, it wasn't able to gain that same type of momentum. It had a much more difficult time following through. So slower, little impulse waves, a lot more back and forth, and then just basically more gradual momentum. That can also mean that when it comes off of lows, sometimes you can get more rapid pops too as the momentum continues to try to shift. And that can even go and turn the trend around. So you can get a complete trend reversal when something like this happens also. Now, at the other end of the spectrum, what we have is something like what we saw in the NASDAQ, where this had more of that slower pullback coming off of the high. This was a double top on a bigger time frame. Went into that messy congestion, and then was able to break down with much stronger momentum. So it was able to do that rapid impulse move with a nice 1, 2, 3 move coming out of the zone of congestion. These are the kinds where you really want to just keep working on building into positions on the downside, staying with the trend, and then waiting for momentum to shift before you go ahead and try to initiate any sort of reversal strategies. And even then, those a lot of times they can be short-lived and then go and continue the trend. So really pay attention to momentum going into congestion, especially compared to how it goes into the high. So if it's slower going into the high, it's easier for it to drop fast off of that high. If it's faster into the high, it's more likely to have a shallow start. But then it can go and gain momentum once that breaks. So very polar opposite type of breakouts here, but it can help you decide which ones you want to be in, which ones you want to build into, and which ones you need to use more advanced trade management. So in something that's a shallow breakdown, you don't need to worry as much about taking partials at support levels, especially initial support levels, because the odds are not as high that it's going to totally give you a bounce and then continue. In fact, when these do bounce and to continue, they almost always hold right here. So even if you do get a premature breakdown, that bounce into it is a good place to add into a position. So you just don't need to be as aggressive with the trade management on a shallow breakdown as you do on something that's going to have more chop. All right, you guys. So that is our little Toni tip here. And let's go back to some of these Forex pairs here. So we're looking at this pound, and I drew this on here the other day because what we were looking at again was really rapid kind of turnaround here. Now, when you get a bounce off of a low and it doesn't do a main continuation right away, a lot of times you might have a chance for it to break out if it does a similar type of time correction. So this is the box that I put on here last week. Now what we talked about though is that it's easier for this to do it if it's down here. So then it can go and gain momentum. If it's at the midway point of the channel, it can be harder. It can have a harder time breaking out because again, you've got this extreme momentum here. So this could just chop and then end up pulling lower. So we might get two T strategies happening over here as this comes back into that resistance zone over there. On the NQ momentum example, why can't we expect a reversal from that congestion? Let me go back to that. There we go. Which one you mean? Why wouldn't this break higher up here? Well, in some cases you do have that possibility that that can happen. The main reason in this case is because we were at exhausted levels on the larger time frames. So the impulse waves were already pretty strong. So it's really a lot harder because of that bigger trend placement. So in the smaller scale, if we were just looking at this by itself, there's going to be cases where this does manage to pull higher. And in fact, I played this as that first initial pop here. It was overnight, but it still had, you know, a little bit of a break out there. And then let me show you. I need to go down to a smaller time frame. Where's the end of the day yesterday? Oh no, that's not the one I was thinking about. Sorry. Let's see here. Oh yes, it was right here. I mentioned this actually in the forum at the end of the day yesterday. I said, hey, this could even gap up coming out of that into the close because it was going into basically a phoenix. So it took a little bit of a surge up there, but I didn't look for a lot on it. I had my exit actually just shy of this high right here. So it's more in line with this high here. And the reason for that is that when we look at the time development, I was kind of looking at this as like one zone of correction and then looking at this as zone 2 of correction. So with this being a downside, this being like the 2-wave correction, like that. It's a really messy example. Let me show you guys what a cleaner one looks like. So here's what a cleaner one looks like. This is the opposite direction, but it's the same pattern, same idea. So it pops, comes up, goes into a zone of congestion, breaks a little bit more, another zone of congestion, and then breaks really strongly. So that's the same idea of what we had going on here. It's just those 2 waves aren't as clear. So this midway level right here, in the other example, it was very clear that then this went into another base like that. This one's not quite as clear. Oh, thank you, David. David was watching that Phoenix I was talking about. Let me show you guys some other, I'll just scroll up. I know there's some more recent ones too. That was another time correction. So here's another one that we were watching. Same idea. This is July 21st, right there. This is a 1500 tick. Let's see what happens. July 21st, 1500 tick. So we were right in here. So what I was watching was for this potential to go and have a bigger breakdown. And so you get to basically a do or die point where here's the first correction, here's the second correction. It didn't quite base out long enough. So this correction wasn't as long as this one is. When they're the same length in time, that's when you have the best chance of a really strong breakdown. So when it gets to about that halfway of this move, this is just what we were talking about earlier. That becomes a do or die point. Is it going to break and do the full measured move, or is it going to stop there? So if you take this and flip it over and apply it to what we were looking at on the daily time frame, that's the potential that we've got on the daily time frame, just flipped over. You might need to go back and review this video so that you can see this. So do like a screenshot of this and then go and review the earlier part of today's session, and then that will make more sense. So that's what I was watching there. And see here how I had projected the time out faster or out further, but it actually went faster. Here's another example. We see these all the time. Here, this is another one that's messy. So see here, you've got that little spike there in the middle, and then you've got kind of like these 2 little sections. So it's tricky to start to see these as they're happening, and sometimes it's really tricky to even see them after the fact until you have a lot of experience with it under your belt, and then you'll see it. So if we're looking at like the daily chart on the NASDAQ, you know, what we're at is like right in here. So it's trying to struggle to be able to put in that full move. So let me show you. Here's the breakout that I took the other day. And then on the NASDAQ right now, on the daily, if you look at this as your two sections of your correction, it's like in here, except that it didn't even make it as strong. So this went up to a 76.4% extension. This went up to maybe about 50%. And then it's going into a longer base. So the time of that base is really important. This one was pushing it. It was right about like where we're at right now on the daily. That's why I said we're basically at a do or die point right now on the daily. So we're at like this level, but it's weaker than it was over here. So we'll see. Those are your comparable corrections for when you're going back and looking at your patterns. So basically right here is what this pullback is. And when we were talking about the potential on the Russell to go and do that somewhat higher high there on the daily chart, if this holds this zone and does manage to pull up there, that would be what would happen. So most likely, if it does manage to hold here, and right now we need to have enough of a momentum shift to do that. It's kind of trying, but we need more. And what we would need to see is it would come up here, do a little bitty base like that, and then try to pull again. So it could basically try to repeat what we saw. Let's see, where was that today? Right here. See this morning? So it would treat like that daily pullback that we're in right now as this low, come up here and then try to do that push. That's what we would really need to see in order to get this NASDAQ breaking to another higher high. So we need to see this kind of shift hit there at our lows. So instead of going into another, base and creeping lower, we need to see that rounding off, going into preferably an upper level zone of congestion like here. So if it happens down here and you get that congestion, it's going to be harder. So if it pops, but then kind of goes into a longer base there, it's harder for that to fully break. But if it can make it up to the upper end of that daily range that we're in right now, and then go into congestion, that would be what we would need to see to get a bigger break on the daily chart. So see like this did? See how that went there? And it went into the base here at the upper zone of the congestion? That's helping this break. Now, it doesn't mean we're going to get a full measured move over here because this is extreme. So it's more likely that the overall break remains more gradual in terms of the momentum. So this smaller measured move right here is actually a good zone of resistance on an intraday chart. Let's look at some of these other Forex pairs here. By the way, there was a really pretty little baby momentum reversal on the 400 tick. Any of you guys see it? 400 tick on the NASDAQ. I'll show that to you fast while those were loading. Well, here it is on the 500. It's actually better on the micros because you have the lower low here on the micro. So it looks a bit more like this on the micro. I keep both of them up because sometimes you'll see something easier on one than the other. Look at this, you guys. See this breakout? This is what we were talking about. See how it starts more gradually here, goes into the congestion, and then you get your stronger break. Here it looks like we'll see pace shifting more back and forth here on the 60-minute. Let me look at the daily. Oh, we got our 2T on the daily. A steep one here. See how it gained momentum there? So a lot of times what that means is that it can still hold that level, but then just start slowly before it tries to gain any more momentum. We talked about this last week on this too, as 2T potential. It hadn't broken yet then, but it has now. So typical 2T would have slower momentum. Like, so it would be average. But we often see some that will be a little bit faster. That can also mean like you might get a smaller 2T happening that can try to shift the momentum a little bit better. But this is a really good resistance zone on this daily chart. Let me look at the monthly again. Keep that in perspective. Monthly has a lot of room still. This is a 2B on the monthly down here. Not a clean one, but it's the same thing. So you have the move down in here, congestion, and then this went faster. So just like the one at the highs with the 2T is faster, this was faster into the low. But it's only halfway here, you guys. So there's room for this to keep going. Look at some of these bigger impulse moves. So this is a more dangerous level for a 2T, so we could see like a shorter term correction, but be more cautious when expecting more than that because it's at a really iffy bigger time frame zone. And change that to a weekly too. See what the weekly is. This is what we would call T2 for target 2. You can see that time correction aspect also with the 2-wave correction here. So you got 2 waves down, 2-wave correction, and then you got the stronger continuation out of that breakdown. So in other times this will just be like this. It'll just look like that. So good zone for it to slow and chop, but not necessarily reverse. Could do a little bit of a pullback here and then keep going like this. So basically it could create like a kneecap here. And pull up some of those other charts while we're waiting on this. So you guys want to look at Pfizer? This is that same 2-wave correction in here, except this is tilted in this portion. So you got your initial move up, your 2-wave correction here, and that's your continuation. I know it's really hard to see this when you are first like getting in tune with the way I look at trends, but it's going to become second nature here. I promise. So this is your 2-wave correction here. So in other circumstances, it might look like this and be more of a really clear-cut phoenix. Let me draw that in blue. So I'll put them in the 2 different colors. So here is what this could have done, just like that. So when we look at it as a trend, I'm just looking at this tilt here as still being the same type of thing. Basically, you got a tilted check mark there. So this is probably going to pull back into this zone more. I would suspect momentum to slow as it does it. Here's our 60-minute. Here's our daily. Oh, good retest of that previous high there. this is so strong that this is really not something that's going to just collapse usually. It's something that it can pull back in here. So maybe it tries to come into that gap zone there and then can shift and even come back up. Sometimes you'll even get measured moves like this. So this becomes more iffy here. My guess is it can come back up into this zone pretty easily over the next couple of weeks and then have another reaction off of that zone. Here's kind of an example when something kind of pivots and holds. It takes a while and then it kind of goes and gains momentum. This is wave 2, back up into this resistance. I want to see the weekly on this. For a new setup, no, I wouldn't. The trend placement isn't good for a new setup on this, I don't think at all. Clear that. So yeah, I mean, this can pull up a little bit more, but I think it's going to struggle. I mean, you've got this main move down here where it reversed and gained momentum. So it's treating this like a time correction, which means anything in here could bring it back down again. It's a tricky zone to trade in right here. We've got time for a couple more if you guys have some other things you want me to look at too. So here's another extreme move. This is actually a momentum reversal, trying to go for a momentum reversal plus type of thing. You've got your 3 lows here. It pops, breaks the channel, comes back down, but it only has one main wave back down. So this has room to go and do another wave back down. This is so extreme though, that wave is more likely to be slower. Trying to do like a little baby avalanche here. This is, I don't know, you guys. I mean, this daily, that can still try to turn around. Because like if we look at like the time development here, it's going out further. This might do like a false break here and then treat this like a 2-wave correction and then gain momentum back up again. I think I talked about that last week. I know the weekly kind of throws you off because it has just one main impulse move down. There's no second move down. And it's easier for this to go if this doesn't flush right here. So if it goes more like that, it's easier for it to go and then gain momentum right back up. That's what we were seeing in these examples. Scrolling. See how that's more of a time correction? I mean, look, it's almost like right lined up with what I did on here. So that would be easier. So it's kind of iffy here, but it's not it didn't go down when it should have. So I might try to trap some shorts and then try to pull back up. I don't know. I would wait on this one. If it pulls back up, I would go long, but I wouldn't go long right here. I'd wait to see if this does it like a phoenix or something like flushes and then turns and does like a little kneecap here. It is kind of bear flaggy, but it's not a good bear flag, you guys. I mean, look at this. This is a major drop here, and then it's shorter here. It's easier for that to turn. This pulled back more than a third of this drop. So Yeah, I think it's going to have a harder time going down. And it does have that momentum reversal plus on the weekly too. Kind of an example is what the Nasdaq's trying to do right now. Where'd my Nasdaq go? It's hiding. Oh, here it is. See this? It's trying to do that right there. We're at the plus portion. So this is that, and then you kind of have that same zone, except that the Nasdaq actually had a slower move. So again, the micro looks better. You have like 3 really clear-cut lows, and then you've got the pull down here into this zone. So here's like your 3 lows, and then you pull back down. So I don't know. This is still really strong momentum on the larger time frames, you guys. I know it doesn't look like it on the tick chart here, but like on a 1-minute chart, that's a pretty strong drop still. So trend placement, not the best for the Nasdaq. Just keep an eye on it here. Euro Swiss. Here's a beautiful avalanche on that weekly there, right smack into measured move. See how that shifted momentum down there? That really helped with this pop. So this is a zone where we can usually get phoenixes happening, but it pulled back more than a third, which is kind of disappointing. So we might get something like this, but then it struggles at that level again. Let's go to daily here. Kind of see a momentum reversal type of action down here. So this has room to try to do a check mark, but it pulled back a third, which means a little bit higher risk trying to get it fully turning there. 60. So you need to hold right here. It's basically at a do or die point. So I would watch this to try to get a breakout higher since the momentum was really strong into this. Could be more gradual as it tries to break out. But you got a bit of a coupled handle there. Here's a 2B down here. Nasdaq still trying. Get some of these loading here. You guys want me to look at here? This is generally a reversal pattern on the weekly time frame. So this will generally go more on the upside. The way you kind of got like this widening megaphone that's pointing down, a lot of times that will go and give you more upside. On the smaller time frames, this is a shallow phoenix. So you're looking at some resistance short term here on the daily charts. Intraday steep 2T, good support. We're in what we could call a widening out zone right now. So this is usually where things like 2Bs and such will try to develop and form. This looks not so great on the 60-minute though. I think your 2Bs are going to be higher risk. My concern is that it's just pulled down in here too fast. It's a really, really fast inverse V here, you guys. Oh, that's harder to hold. If you get a shorter one and pulls back like that, it's easier to treat this as like a support zone and it can bounce off more quickly. This is a little bit trickier. So my concern would be that this might go and end up pulling down through that range instead. I I bought this NASDAQ here, sorry. I confess, a little distracted. Scalped it. All right, let's see here. It was a momentum reversal plus in the NASDAQ. Let me show it to you. Sometimes you see something, you're like, ooh, I just gotta have it. It's not a big setup though. I just scalped that little move there. If this was better trend placement, this would go here. This would have a really strong move, but there wasn't enough moment. There wasn't just enough volume coming in with this as it was trying to turn around. That's why I got out at 10,444. Let's see, where is that? Right here. So I didn't get a lot on it, but I was in from here. So what we would usually expect is that if the trend placement is better, this should go quickly here. So you will get this pulling through even these previous highs without too much of a pause. You might get a little tiny pause right here as it's coming into the previous high, but it's usually more like just like it's like catching its breath and then it will go again. Can it still try again? Yeah. I mean, it's trying again here, but I'm a little concerned with the trend placement, and if I wasn't in class, maybe I would be a little bit more paying attention. Let's go look at, let's see, you want to see, yeah, so this dollar yen, or sorry, no, New Zealand, Kiwi yen. I'm like, what are we looking at? The Kiwi yen here, it's just too fast into this, so I think it's going to try to pull in here. So on smaller time frames, what you would want to look for to get like a better bounce would be something like that as it comes into this zone. So you might get like a shorter term bounce like this, but then if it can go and shift and do like a 2B on a 60-minute time frame, that's where we could get that coming in again. Could the NASDAQ go into an inverse check mark? It could. Is that what you're referring to, the NASDAQ? So it would treat this as your check mark zone. Yep, that's what I'm leaning towards right now. Just because it's not showing any confirmation here on this. It might pop back up into this range a little bit more, but I think it's going to be choppy because it really should have gone faster. With a 2B, what you expect is that, so this would be the 2B basically. So the momentum reversal plus would be your 3 lows, and then your move down again. And that should go pretty quickly. So even here, where it was kind of doing almost another momentum reversal plus, that was a little bit higher risk because it shouldn't have a longer Phoenix here. It should come up, do like a 1, 2, 3, and go faster. Let me show you guys the template for those of you that are newer. I'll find it. Here it is. So here's what should happen. So here's your 3. So you just flip this over. Okay, so here's your 3, and then there's your plus, and then it turns right away. And notice this just didn't do that. Let me do a screenshot of this and flip it over for you guys. And then you guys can see the comparison better. Getting thrown in some other lessons that are totally different from, hey, what's our larger term outlook, right? But still, really good to know as you're learning the strategies. Which ones are higher risk? This is what you guys were talking about in study group in about the 2T and 2B, right? Last night. I haven't had a chance to go back and watch you guys yet. League of Trader members, the replay link was posted in the Telegram too. So talking about the failed ones, yep. So this is a great example to talk about for a failed momentum reversal plus. We were just looking at what those pros and cons were. Where it just doesn't go right away. So here is what you've got going on here. Now let me show you the NASDAQ. Yeah, the plus wasn't really a great to be either, true. You also didn't have that middle low on the NQ that you had on the micro. So see the subtle differences here. So this really should have gone a little bit faster. This would usually have a faster move up. So you're looking at right here is right here. And then it would go into a Phoenix at some point and continue. Sometimes it'll go with just a 1, 2, 3 and you won't get a Phoenix. But that's your kind of difference here that's going on. So it's having a little bit of a harder time down at that zone. And that is why it can lead to just being like a tilted check mark and where that could eventually break away and give another move to the downside. Basically treating this as your first time correction. This is the second time correction. Let's see here. We got gold. I'm gonna pull up a daily chart on gold for you guys, and we'll wrap up with that. Wow, time goes fast, especially when I get sidetracked, right? I'm just grabbing a picture of gold here for you guys. So what you would want to do here for time development, while this is pulling up, go up here to a bigger time frame. So for this to do like a tilted check mark, what you would watch is like this time development here, and then this time development here. So right around here is probably where it would try to go if it does a tilted check mark type of thing. Basically, it would hold in this zone. It might widen up and do it like a megaphone, but then you would get the breakdown. We don't have a confirmation yet for that. It's just really at an either or point. I'll come back to this in a second. We'll look at gold here first. Gotta see where I posted my, oh, there it is. Find my charts. So here's gold. This is our daily chart on gold. And what you can see is the really extreme move up again. And then even though it's having like a faster section here, this overall move still is more gradual for the trend. So I've been focusing on this zone as a resistance zone on gold. Basically just kind of treating this as like, here's a check mark. This is an example of a tilted check mark right here, actually. Let me show you. You get kind of the zone of congestion. If this was more like a V here, that would be like a check mark. So that was what we were looking at as a possibility on the NASDAQ. It's not really developing that well yet, though. But with the really strong momentum up here, for this to try to turn around, it would usually be slower and then try to gain momentum. And then there's also risk of things like 2Ts, momentum reversals, megaphones, basically any type of reversal pattern could happen up here. Yeah, we need another checkmark class, right? We can plan that in the schedule. We'll do another week on checkmarks. So if this is going to do like the megaphone version here, whoops, it's basically at the zone it would need to hold. You can see this kind of did like a little another momentum reversal. I wasn't focused enough to try that one. But if it's holding as like a megaphone here, this would be your first correction. This is your second correction, and then it would try to break down. It's kind of a little fast. It might do like a retest here. So megaphone is also could be part of a check mark. Usually you get more of a parallelogram type of thing going on. Harvey, you don't want a check mark class at all, do you? Like, yes, 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 yes. Uh, that's enthusiasm. Oh my gosh, he just tripled it. What are we studying next week? Donna, we are doing psychology. We're diving into your brains next week. Yep, that's the plan. All right, you guys. Well, we will wrap this up here today, and I'll see y'all back next week. So we'll see if we can catch some little bitty trades in here into this afternoon still. Kind of in a bit of a zone of pain area, but little baby avalanche just triggered. So we can see it's kind of holding with that mega bone. There's your little baby avalanche right there. Almost like a 1, 2, 3 kneecap fast. So this whole thing is a time correction, you guys. So it went and it did that megaphone we were looking at as a possibility. All right, folks, I will see you back here next week. Have a wonderful rest of your day. And there it's trying to go.